Hi friends, good morning everyone. Lovely Tuesday. We started with the subject of advanced auditing and professional ethics yesterday. And yesterday, what did we do? We just understood all the chapters which are going to be covered. And we understood basically your preface to engagement standards. Yeah, now it's not called auditing and assurance standard. Now it's called engagement and quality control standards. So under your engagement and quality control standards, for engagement standards, there are four things. SA, that is basically for audit. SRE, that's basically a review. SAE is standards on assurance engagement, which is other than historical financial information. And SRS is standards on related services. Under engagement standard, these four are covered. And while doing any of this, whether you're doing audit or a review or related services, you need to follow the quality control case standards to ensure that you have a good quality of your audit or a good quality of your review or good quality of your related services. You have SQC, that is basically standards on quality control. Achha, any doubts? Anybody in yesterday's work? We just did preface to the standards. Good morning. Any doubts? Anybody in yesterday's work? Okay, now today's target is SA 200 and your second one is SA 210. The two standards we need to finish off today. I know you have done this in your inter level, yeah, but the level of depthness and the clarity which you'll be getting is bit in detailed manner over here. Chalo, let's start with SA 200. We are starting with standards on auditing. We're starting with what? Standards on auditing. Sir, SQC, standards on quality control, the first series was SQC, 1 to 99 was SQC. I told you, as of now, there's only one SQC issued. That is SQC1. And the content of SQC1 is similar to SA220. SA220 is also quality control for audit work. SA220 is quality control for audit. SQC is quality control. That is also standards on quality control. That is general. Whether you do audit, whether you do review, whether you do related services. So SA220 is quality control only related to audit. SQC1 is general, whether we are doing audit, review or anything. But the content of both is kind of similar. So I'm not doing SQC1 separately. The content of SQC1 will be covered together with SA220. Okay? Let's begin with SA200. There are two parts. If you check out over here, first one is overall objectives of an independent auditor. This is the first part. Overall objectives of independent auditor. And now the second part starts, that is conduct of audit in accordance with SA. The first part is overall objectives of an independent auditor. Second part is conduct of audit in accordance with SA. Let's focus on the first part. Which are the overall objectives of an independent auditor? My question, whether the objective of auditor is to find out fraud and errors. Whether the objective of auditor is to find out the frauds and errors. Okay, Pratap, audio is fine from my side. Just check from your side, please. You can just refresh it. Okay, so whether the objective is to find out the fraud and error, answer is no. The objective is not to find out the fraud and error. Objective is to obtain a reasonable assurance. We are required to obtain a reasonable assurance and we are required to report whether the financial statements are showing a true and fair view. See, we are not giving absolute assurance, we are giving a reasonable assurance. To give a reasonable assurance, I repeat, to give a reasonable assurance, can I say we should obtain reasonable assurance first? These are fine. Then I can give a reasonable assurance now. The objective over here is basically to obtain a reasonable assurance so that we are able to give our opinion. And then second objective is we have to give an opinion that the financial statements are showing a true and fair view. The objective is not to find fraud and error. Objective is to obtain a reasonable assurance so that we are able to give an opinion and then we are required to give an opinion. Okay. So that's basically the two overall objective. But before I go to overall objective, they're given a definition of the word audit. They've given a definition of the word what? Audit. The audit kya hai? It's an independent examination. The one who is doing audit has to be an independent person. It's an independent examination of what? Financial information. Of whom? Okay, of what? Financial information. Of whom? Any entity, whether profit oriented or not. You know, audit is also there for trust. We know that trusts are exempted from income tax. Trust ka income is not chargeable to tax. Trusts are exempted to income tax, but to get an exemption from income tax, they have to get the books of accounts mandatorily audited. Okay, the audit is what? Independent examination of what? Financial information, of whom? Any entity, whether profit oriented or not, irrespective of its size or legal structure. And why do we do audit? What is the purpose? What is the purpose? So such an examination is conducted with a view to express opinion thereon. Our objective is actually to express opinion on the financial information. Okay, so check out the definition. Audit is an independent examination of what? Financial information, of whom? Any entity, whether profit oriented or not, irrespective of size or legal structure. And why? Why do we do audit? What is the purpose? When such an examination is conducted with a view to express opinion thereon. So see, I just cut the definition in part. So it becomes easy to remember. Audit is independent examination of what? Financial information. Of whom? Any entity, whether profit oriented or not, irrespective of size or legal structure. And why? What is the purpose? The purpose is to express opinion on that financial statements. Okay. Now coming to the word overall objectives. This is important. The overall objectives of independent auditor are, one, to obtain a reasonable assurance. Whether the financial statement as a whole are free from material misstatement, whether due to fraud or error. Misstatement can be due to fraud, or misstatements can be due to error. Frauds are intentional, errors are unintentional. The overall objective is what? To obtain a reasonable assurance whether the financial statement as a whole are free from material misstatement, whether due to fraud or error, thereby enabling the auditor. So why should I obtain a reasonable assurance? So that I'm able to give an opinion. Thereby enabling the auditor to express an opinion whether the financial statements are prepared in all material aspect as per the applicable financial reporting framework. Acha. To obtain a reasonable assurance whether the financial statement as a whole are free from material misstatement, whether due to fraud or error, thereby enabling the auditor to express an opinion whether the financial statements are prepared in accordance with applicable financial reporting framework. So see, they are telling you obtain a reasonable assurance so that you are able to give an opinion. And now you're second. And you report on financial statement. And communicate as required by SA your findings. So whatever are your findings, you communicate. So communicate as required by SA your findings. So you obtain a reasonable assurance so that you are able to give an opinion. And second, you give your opinion. You report on financial statements. Now, there's one word coming over here which I would like to explain. The word says applicable financial reporting framework. You obtain a reasonable assurance so that you are able to express an opinion whether the financial statements are prepared in accordance with applicable financial reporting framework. ये क्या है? What do you mean by the word applicable financial reporting framework? Sir, laws and regulation. Yeah, in simple words, it is laws and regulation. Now, when they say applicable financial reporting framework, That is nothing but a financial reporting framework which is used for preparing financial statement. I repeat, it's a financial reporting framework. The basis, yeah, Mahesh or AS or IND-AS. The basis which is used in preparation of financial statement, that is called applicable financial reporting framework. Okay, can I say if our company's net worth is 250 crores or more, our company's net worth is 250 crores or more, the financial reporting framework which will be applicable will be the IND-AS. But if our company's net worth is less than 250 crores, so can I say the financial reporting framework applicable will be the normal accounting standards? Okay, the financial reporting framework is nothing but the framework, the basis used for preparation of financial statement. Basis which is used for what? Preparation of financial statement. Now question, who prepares financial statement? Who prepares financial statements? Are management. Management. So can I say this applicable financial reporting framework would have been adopted by the management? Financial reporting framework is the framework used for preparation of financial statement. Who prepares it? Sir, management. So the framework would have been adopted by the management. Did you got it? Now just go down. I just put a star here. And write down at the top. Please keep on replying. The more you keep on replying, the more you'll enjoy the classes. Okay. Financial reporting framework is the framework, right in bracket, the basis used in preparation of financial statements. Mohammed, just check from your side. Our side, it is absolutely fine. You can just refresh the page or log in again and try to check why you're not able to see. Financial reporting framework is the framework, bracket mein basis, which is used in preparation of financial statement. Now, as management prepares financial statement, so can I say the financial reporting framework has to be adopted by the management? It will be selected by the management, how they prepare financials. Okay, check over here. So what do you mean by the word applicable financial reporting framework? The applicable financial reporting framework refers to a financial reporting framework adopted by the management. Did you understood the word adopted by the management? Management prepares financial statement. So which framework to use, they have to decide. It's adopted by the management in preparation and presentation of financial statement. It's adopted by management in preparation and presentation of financial statement. And when do I say it's an applicable financial reporting framework? It is acceptable. That is acceptable based on nature of entity. Okay, it should be acceptable based on nature of entity and the objective of financial statements, and which is as per the laws and regulation. Okay. So what is an applicable financial reporting framework? It's a financial reporting framework adopted by the management in preparation and presentation of financial statement, and which is acceptable. What makes it the applicable one? It is an acceptable one based on nature of entity. My question, partnership firm preparing financial statement in horizontal format. Okay. Partnership firm preparing financial statement in horizontal form. Allowed? Yeah, it is acceptable based on nature of entity. The partnership firm preparing financial statement in horizontal form. Allowed. And it is also acceptable based on objective of financial statement. Now, board of directors, pay attention. The board of directors are preparing financial statement in horizontal form for internal purpose. The company preparing financial statement in horizontal form, but it's for internal purpose, not to be given to shareholders. So for internal purpose, they prepare monthly financials. That monthly financials for internal purpose are as per horizontal format. Allowed. As per the objective of financial statement, chalega. If it was to be given to shareholders, outsiders, then it was not allowed. And it has to be as per laws and regulation. I hope it is clear. So see, normally as a student, when someone asks you what's the applicable financial reporting framework, people say, sir, as per laws and regulation. So something which is as per laws and regulation, that's the applicable financial reporting framework. That's correct. You're not wrong. But when question comes, I cannot write just which is as per laws and regulation. I have to write it's a financial reporting framework adopted by the management in preparation and presentation of financial statement, and it is acceptable based on nature of entity, it is acceptable based on objective of financial statement, and it is as per laws and regulation. Did you understand? You just have to bifurcate or sort out the definition, it becomes easier. Okay, so that is acceptable based on nature of entity. I write down over here partnership firm preparing financial statement horizontally. Allowed? Yes. Okay, second, which is based on objective of financial statement. I write down over here company preparing monthly financial statements horizontally for internal purpose. This is also fine because it's for internal purpose. That is acceptable based on nature of entity. It's acceptable based on objective of financial statement. It's as per the laws and regulation. Okay. Now, if you see over here, the word was, it's a financial reporting framework adopted by the management or wherever appropriate TCWG. It's adopted by the management or wherever appropriate those charged with governance. Now, sir, what is this TCWG? And wherever appropriate TCWG. See, management, TCWG both refers to companies people. When I use the word management, when I use the word TCWG, both are company ke people. But TCWG is kind of higher level people. Management is medium and lower level people. TCWG is what? Higher level people of company. Management is what? Medium or lower level people of company. We have SA 260. Under your SA 260, there's a definition given. Under SA 260, there's a definition given. What is a management? What is a TCWG? So TCWG are those who give strategic direction to an entity. Those who give what? Strategic direction to an entity, they are called TCWG. And those who are in implementation of decisions, those who are in implementation, who have executive responsibility for conduct of operation, they are management. The simple words, TCWG is higher level, management is kind of medium or lower level. The financial reporting framework, when do I say it's an acceptable one? So it's a financial reporting framework adopted by either management or TCWG, both for us, our company's people only. Okay, so whether it's adopted by TCWG or management doesn't make a difference for us. तो मैनेजमेंट किसको बोलते हैं? तो मैनेजमेंट who have a executive responsibility for conduct of operation, and TCWG किसको बोलेंगे? They are the persons who have a responsibility for overseeing the strategic directions of the entity. Okay, now sir, can a same person come under TCWG as well as management? Tell me, can a same person come under TCWG as well as management. Those who give strategic directions, they are TCWG. Those who are in conduct of business, they are management. Both are companies people only. Can a same person come under TCWG as well as management? Answer is yes. Now, sir, why yes? Okay, now tell me, for a partnership firm, who will give strategic direction to a partnership firm? So partners. And imagine it's a small partnership firm. So all the decisions are taken by partners and implementation of decision is also done by partners. It's a small partnership firm. They are there in conduct also. If you are giving strategic direction also, you are there in conduct also. Can I say you'll be coming under both? So it is possible a same person can come under management also. Same person can come under TCWG also. Acha. Now question. If audit has been done, can a user assume that there are no going concern issue in the company? If audit has been done, can I say the future of the company is very good? No. Audit doesn't tell about the future viability of enterprise. Repeat, audit doesn't tell about what? The future viability of enterprise. If loss is shown as loss, I'll say the financial statements are showing a true and fair view. It was a loss. They've shown it as loss. Proper bataya. I'll say it shows a true and fair view. How will be the future of the company? We don't talk about it. The audit does not tell about the future viability of the enterprise. An audit doesn't say how well the management has conducted the affairs of the enterprise, how well the directors are running the business. We don't talk about all that things. We just say whether the financial statements, whether these financial statements are showing a true and fair view. So check out the sentence which is written over here. The user should not assume that the auditor's opinion is an assurance as to the future viability of enterprise or efficiency or effectiveness with which the management has conducted the affairs of enterprise. Audit doesn't tell how well the company is run by the directors, and audit doesn't tell about the future viability of enterprise. Any doubts? Anybody till now? Any doubts? Anybody till now? Important is overall objectives. Anything important is already marked as important over here. So to obtain a reasonable assurance whether the financial statement as a whole are free from material misstatement, whether due to fraud or error, and thereby enabling the auditor to express an opinion whether the financial statements are prepared in all material aspect as per the applicable financial reporting framework. And number 2, to report on financial statement and communicate as required by SA your findings. Now, what's the applicable financial reporting framework? It's a financial reporting framework adopted by the management or wherever appropriate those charged with governance. For what? For preparation, presentation of financial statement. It has to be acceptable. It has to be acceptable based on the nature of entity, the objective of financial statement, and as per the laws and regulation. Is it clear? Okay. Now moving ahead, responsibility of financial statement. We know that the management is responsible for financial statement. Who is responsible for preparation of financial statement? Management. And that responsibility also includes what? The management is responsible for preparation of financial statement. Yeah. Plus what all things management is responsible? Can I say management is responsible for selecting proper accounting policies, applying them consistently? Management is responsible for selecting proper accounting policies, applying them consistently. They are responsible for making estimates and judgments which are prudent. The proper estimates and judgments they have to make when they are preparing financial statement. Third, they are responsible for prevention and detection of fraud and error. The primary responsibility for prevention, detection of fraud and error is on management. Our responsibility is to express an opinion. Fourth, management का responsibility is to set up good internal controls. Internal controls are policies and procedures adopted by the management. Policies and procedures adopted by the management that helps the management in fulfilling their responsibilities. So establishing good internal control is again their responsibilities. So these are all responsibility of management they have given. Okay, just put a star here. Okay, double star. And I write down below. Okay. Internal controls are policies and procedures adopted by management that helps management fulfill their responsibilities. Keep writing, keep highlighting, and keep answering. Audit does not relieve management of its responsibility. If audit has been done, does it mean that the management responsibility go down? No. The responsibility of management is going to remain same. Audit doesn't relieve them from their responsibility. Still, management is responsible for preparation of financial statement. Still, the management is responsible for selection of proper accounting policy, applying them consistently. Still, management is responsible for establishing internal controls. Management is still responsible for safeguarding the asset. वो उनकी responsibility will remain same. Audit does not relieve the management of its responsibilities. ठीक है? This is just responsibility of financial statement. It's on management. Now, the scope of audit. The scope of audit. What all will be included in your audit? What all I have to cover in my audit? The scope of audit depends on what? What all I have to cover in audit? It depends on what? One, can I say law or regulation? Law or regulation says this all you need to cover in audit, I have to cover. Imagine CARO 2020, Companies Auditor Report Order. If CARO is applicable, so under CARO 2020, there are some 21 matters which I need to cover. ठीक है. So what all I need to cover in audit? One, it depends on laws and regulation. ठीक है. One. Number two, it depends on pronouncement of ICA. ICA is came up with auditing standards on auditing. So under SA, if they say you have to do this, you have to do this, you have to do this, you have to report like this, you have to do that. So SA 700 is on reporting. What all I need to cover in my report is given over there. So what all I need to cover in audit depends on laws and regulation, pronouncement of ICI. Third, it depends on terms of engagement. Terms of engagement between us and the client. So whatever are the terms of engagement, uspe the scope is dependent. And fourth, the scope will also depend on the legal judgments given by the various courts of law. If there's a judgment by a court of law telling that you have to check this particular item in a particular way, telling that you have to check the particular item in a particular way, I need to check that particular item in that particular way. Clear with this? So the scope depends on terms of engagement. The scope is dependent on the terms of engagement, then the legislation, laws and regulation, pronouncement of ICI, and some legal judgments by various court of law. Achha, terms of engagement cannot restrict the scope which is given by statute or pronouncement of ICI. Whatever is given in statute or pronouncement of ICI, the terms of engagement cannot restrict the scope, it can increase it. If law says I have to check this, the terms of engagement cannot say don't check. The terms cannot say that you don't check this. The terms of engagement cannot restrict the scope which is given by statute or by the pronouncement of ICI, but they can increase it. Are you clear? ठीक है, so this is basically the scope of audit. Now every standard has objective, and to fulfill the objective there are requirements. Every standard. And not just this first one. First one, we have a overall objectives of independent auditor. Otherwise, every essay issued, every standard is issued, there's an objective behind that standard. And how do we fulfill the objective? There are requirements given to us. As this is the first standard, we had an overall objective. As this is the first standard, objective kaisa tha? Overall. And the requirements are also kind of general. Requirements are also kind of general. So now coming to the auditor's requirement to fulfill the objective. To fulfill objective, we have this requirement. Okay, first requirement, ethical requirement related to audit. Ethical requirement related to audit of financial statement. So first, see, I want to obtain a reasonable assurance and then I have to give an opinion. That's my objective. You obtain a reasonable assurance so that you are able to give an opinion and then you give your opinion. Okay, for that, first you need to follow ethics. Yeah, first you need to follow ethics, your integrity, objectivity, confidentiality, that all you need to follow. See, there are 5 fundamental principles in auditing. Yeah, there are 5 fundamental principles in auditing. So that 5 fundamental principles we are required to follow. So pay attention. You need to comply with the relevant ethical requirement, including independence, the code of ethics issued by ICI. There's a code of ethics issued by ICI. And there are 5 fundamental principles. There are 5 fundamental principles. Which are the 5 fundamental principles? Integrity, that is honesty. Objectivity means unbiased attitude. Okay, so you have to act honestly. Second, you should have an unbiased attitude. You should not fall in the words of management. You should not fall in the words of management. You're not working for management. You're not working against management. It's basically you have to be neutral. The unbiased attitude, that's objectivity. Okay, professional competence and due care. You have to be professionally competent. Okay, you need to keep yourself updated. You need to give training to your team. That all comes under professional competence and due care. While doing audit, proper care should be taken. Proper planning, assignment of team, that all should be done. Okay, confidentiality, the confidential information of client, you should not disclose to anyone. While doing audit, we get to know about the confidential information of client. Don't disclose to anyone unless it's required by law or regulation or you have a permission of client. And last, you should have a professional behavior. You should have a professional behavior, like you're given a deadline for completion of audit, try to complete it in that deadline. So that professional behavior should be there. Okay, the 5 fundamental principles: integrity, objectivity, professional competence, due care, confidentiality, and professional behavior. Follow the ethics. And they're telling auditors should not only be independent, but also appear to be independent in the eyes of others. I should not only be independent, but also appear to be independent in the eyes of others. So see what happens sometime. Imagine the managing director of a company is a very good friend of mine. Okay, managing director of a company is what? A very good friend of mine. See, if your friend is a director, you're not disqualified. But if your relative is a director, if your relative is basically a director over there, you're disqualified to be auditor. But if friend is a director, you're not disqualified. The managing director is a very good friend of mine. I'm not disqualified to be auditor. But now the problem is, every weekend, Saturday, Sunday, we play tennis together. Every day or every weekend, we are playing a tennis together, and people always see us together. We are there in parties together. We have basically family functions when we are together. So whenever people are seeing you together, can I say people will always feel, yeah, you are his friend only. You're not going to give a proper report. Yeah. Every time you're playing together, every time you're there together in family functions, etc., all that things. So people are seeing you together, people will feel you're not independent. So if I am an auditor of that company, I need to ensure that I need to have a restricted access to that friend of mine. So you should not only be independent, but also appear to be independent in the eyes of others. The code describes independence as both independence in mind and independence in appearance. Independence of mind and independence of appearance. Any doubts? Anybody? Keep smiling, pay attention. Any doubts? Anybody? Keep replying, please. Okay. Now going to the word number 2. So they've given you overall objectives too. To fulfill the objective, they've given you requirements. Okay, requirement number 1 was follow the ethics. Okay, requirement number 2 is maintain professional skepticism. You're required to maintain what? Professional skepticism. Now, sir, what is this professional skepticism? It's an attitude where you have a questioning mind. It's an attitude where you have what? A questioning mind. You're alert to circumstances where there can be a fraud or error. I'm not telling there is. You're alert. You're alert to circumstances where there can be a fraud or error. Now, just tell me one thing. We are doing audit of a company, and we know that company is planning to go for a IPO, or company is planning to take up a bank loan. Okay, the company is planning to take up new funding, or company is planning to come out with the IPO. Tell me, where there might be misstatement? कहाँ पे misstatement हो सकता है? I'm not telling there is a misstatement. Where there might be a misstatement. Company is planning to come out with an IPO, or company is basically planning to take up a new funding. Where there might be misstatement. Achha, what do you think? Profits will be inflated or profits will be deflated? If you want to come out with an IPO, you are planning to take up a bank loan, your profits you will try to inflate or profits you will try to deflate? So profits will try to inflate. They'll try to show more revenue, they'll try to show more profit, so they get more valuation, they get the funding easily. Yeah, so I know that if company is planning to take up a new funding or coming out with an IPO, वहाँ पे it is possible they'll try to show more profit. So when I say audit should be done in a manner, I have to look for fake sales. Yeah, I have to look for the expense which are not recorded. That way it will be there. But imagine a small partnership firm. Imagine a small partnership firm. They want to avoid taxes. Okay, there's a small partnership firm. I know the owners are such that they always try to avoid taxes. If owners are such, they always try to avoid taxes. Can I say they'll try to deflate the profit? I need to be alert. If I know, if I just get a hint that company is planning to raise new fund, I should be very much basically checking the revenue, the sales in a proper manner. There might be a fake sales over there. Okay, there might be some expenses which are not recorded or provisions which are not done because they want to show a good profit. So that is basically you're maintaining an attitude of professional skepticism. You're alert to circumstances where there can be a fraud or error. Okay, so what is it? Check out. Professional skepticism is an attitude that includes a questioning mind, being alert to conditions which may indicate a possible misstatement due to fraud or error, and you critically examine the audit evidence. So whenever you're checking audit evidence, you are critically examining the audit evidence, not just upar se. Not just upar se, you critically examine the audit evidence. Now I tell you one example. This really happened to us. I'm talking about 2006-07. When I was in my articleship, this basically was one of the way we discovered one fraud. There are two bills. Okay, we are checking two bills. This is a bill coming from, say for example, A Limited. This is a bill coming from, say for example, B Limited. The bills are for purchase of fixed asset. Achha, so we have some, it was a pharmaceutical company. It was a pharmaceutical company and they were trying to build a new manufacturing plant. They had came out with an IPO, they got some 100 crore rupees and now they were coming up with a new manufacturing plant. So when I say new manufacturing plant they are building, and it's not a ready one fixed asset. A lot of machineries, parts of machineries are being bought and then assembled. Lot of part of machine are being bought and then assembled, and this is a bill from A Limited. There's a bill from B Limited to, say for example, our company was X Limited. Okay, say for example, this bill is of 1 CR, this bill is of again 1 CR. And earlier, we didn't have computerized bill, mostly it was manual bill. And currently what we have in GST is, whenever there's a GST there, you can take a credit, wo data is to be uploaded. So the guy who sold it, he will be uploading the data. You are taking a credit, you will also be uploading data. It is masked, all that things. But 2006, this all was not there. There was no computerized system. Okay. Now over here, there's someone signing. Over here, someone is signing. So we have two bills, one of 1 CR, another also of 1 CR. Two bills are there. Now if you just check out, यहाँ पे the signatory is done by Mr. A. Here the signatory is done by Mr. B. Here the signatory is done by Mr. B. But the way it has been signed, see, after signing, some people have a line, they put some two dots. So यहाँ पे if you see this stroke, can I say the signature stroke appears to be similar? The way in which the sign is done appears to be similar. It looks like a same person would have signed it. It looks like it's written A, it's written B. Okay, it's written different thing, but it looks like a same person has signed it because the way in which the sign is done, it's in a similar way. So because of this, we got a doubt. So when we are checking the bills, they had some 100 crore rupees of capitalization. In that 100 crores of capitalization, fixed asset bills were there. A lot of machines, parts of machine, they were all purchased and it was there. And now whenever you ask that, sir, show me this part, they say that we have purchased this part, show me in part. They will say that, sir, it has been fitted inside the machine. We cannot show you. The physical verification, etc. is not possible. But from the signature stroke, we got a doubt. So what did we do? First thing we asked for physical verification, not possible. Now what did we do is, this A Limited. Earlier we used to have a VAT number. Currently GST है तब VAT था. So VAT number of the entity is there. You put it on government's website. You understand this VAT number is registered in whose name? Okay, so over here, first of all, the phone numbers were given. We try to call the phone numbers. This number is not in existence. Okay, second, we put the VAT number on the government's website. We found out this VAT number is registered in someone else's name. It's not of A Limited. It's not of A Limited. This VAT number is registered in someone else's name. Same with B. Same with B. So we understood both these bills. Both the bills are fake. So A Limited, B Limited, both the bills are fake. The VAT numbers are already registered in someone else's name. It's not basically registered in A Limited's name or B Limited's name. But see, the doubt came from where? The doubt came from this small thing, a signature stroke. So this is nothing but you're being alert to circumstances where there can be fraud or error. You're critically examining the audit evidence. You're critically examining the audit evidence. Did you got it? Now, not just these two bills were fake. All bills of A Limited, B Limited were fake. Not just these two bills were fake. All bills of A Limited, B Limited were fake, and total fake bill amounted to around 10 CR. So imagine 100 CR ka manufacturing plant was being built up. 10 CR we found the fake bill. This is what we found. There might be other bills also which we are not able to find. We don't give absolute assurance, right? So 10 CR ke fake bills were found out. Sir, iska payment was done. Definitely payment was done. So, sir, where did the money go? Money went to director's relatives account. If at all you are checking that, book mein entry hai, payment went in bank statement, yeah, payment went in bank statement, whose account it went? Whose account it went? It went in the director's relatives account. So this is how we identified just from the small signature stroke. This is being professionally skeptic, critically examining the audit evidence. Okay. So I'll give an example over here for signature stroke. Okay, so it's an attitude, you have a questioning mind, you're alert to circumstances where there can be a fraud or error. I'm not telling there is. And you critically examine the audit evidence. Now, being professionally skeptic. Professional skepticism includes being alert to. Okay, if you're professionally skeptic, you become alert to what? You become alert to evidence that contradicts other audit evidence. Evidence that contradicts other audit evidence. Okay, the purchase quantity, invoice quantity, and inward register quantity are not matching. The purchase bill shows 100 units purchase, inward quantity in inward register. The inward register is showing basically only 50 units. So, वहाँ पे mismatch है, you become alert, there may be a fraud or error. I'm not telling there is. It is possible another 50 units came tomorrow. The 50 came today, another 50 came tomorrow. Invoice is together 100. It's not necessary there is a fraud or error. So, audit evidence that contradicts other audit evidence. Example, invoice quantity and inward register quantity not matching. ठीक है. Information that brings into question the reliability of document. Information which brings into question the reliability of document. The simplest example, signature stroke. So from that signature stroke, it appeared that the bill might be fake. Okay, conditions that may indicate a possible fraud. Example, fundraising. If they want to raise the funds, they might have shown higher revenue, inflated the profits. So you become alert to. You become alert to what? One, evidence that contradicts other audit evidence. Information which questions the information that questions the reliability of document. Third, condition that indicates possible fraud. Fourth, circumstances that suggest a need for audit procedure in addition to those required by SA. Okay, if I'm able to understand यहाँ पे there may be a fraud or error, can I say I should do extra procedures over there? So being professionally skeptic helps you to understand or helps you to be alert where I need to do more procedure even than what is said in essay. Did you understood? So we understood definition of the word professional skepticism. We understood by being professionally skeptic, we need to be alert to what? We become alert to what all things? We become alert to what all things? Now, if you are professionally skeptic, what are the benefits? If you are professionally skeptic, what are the benefits? The professional skepticism, maintaining professional skepticism reduces the risk of. Okay, if you are a professionally skeptic person, it will reduce the risk of what? One, overlooking unusual circumstances. You will not miss out the unusual things because you are alert. You're skeptic. As you're an alert person, you'll not miss out unusual things. Over generalizing conclusions. Okay. Now see, what happens is, imagine this one topic which I'm explaining. There are students who don't understand it. If suppose someone has not understood it. Now, if someone has not understood it, there are one category of student, they will not ask the doubt. They are a bit shy, they are not asking the doubts. And then they try to read on their own and try to interpret. So you were there in class, you did not understood a thing, and because of that, you did not ask your doubt. Later on, you read on your own and you interpreted on your own. Can I say you would have tried, but it may go wrong. You might have generalized the conclusion. But if you're a skeptic person, you keep on asking doubts. You have a questioning mind. Why like this? Why like this? Why like this? And you ask your doubts and you clarify it. Can I say your conclusions will never be generalized? It will be a very specific conclusion. The maintaining professional skepticism reduces the risk of overlooking unusual circumstances. It reduces the risk of overgeneralizing the conclusions, and it reduces the risk of using inappropriate Reduces the risk of using inappropriate nature, timing, extent of audit procedure. If I was a skeptic person, I know the areas where there can be a fraud or error. Oh, I know यहाँ पे there may be a misstatement. Can I say I'll check that in detail? So my nature, timing, extent of audit procedure, which I'm using, will not be wrong. That reduces the risk of using inappropriate nature, timing, extent of audit procedures. Clear? Okay, so see, one, we understood definition of professional skepticism. Second, we understood maintaining professional skepticism, you become alert to what all things. Third, maintaining professional skepticism reduces the risk of what all things. What are the benefits? And now fourth. Now coming to the fourth point, professional skepticism is required for critical assessment of audit evidence. When you have a contradictory audit evidence, when you have a doubt, you go in detail and check it. That's okay. And one more thing, if I believe the management of the company is very honest, okay, if I believe that the management of the company is honest, can I leave my skepticism? If I believe the management of the company is honest, can I leave my skepticism? Say I'm doing audit of a Tata group of companies, and see, Tata group are known for basically their integrity. I'm doing audit of Tata group of entities, so वहाँ पे I don't maintain professional skepticism. Is it fine? Answer is no. You still have to maintain professional skepticism. To check out, a belief that management and TCWG are honest does not relieve the auditor for a need to maintain professional skepticism. The belief that the management is honest does not relieve you from need to maintain the skepticism or be satisfied with less than persuasive audit evidence. Persuasive means convincing. You should not be satisfied with less than convincing audit evidence. The evidence has to convince you. If they are not convincing you, go in detail. This is about professional skepticism. You need to plan and perform your audit maintaining professional skepticism. ठीक है. So there were two overall objectives. To fulfill the overall objective, there are requirements. Requirement number one, maintain ethics. Follow the ethics. Second, maintain professional skepticism. Third one, professional judgment. You should exercise professional judgment. You should exercise professional judgment in planning and performing an audit. You should exercise professional judgment in planning and performing an audit. Now, sir, what's a professional judgment? See, many places in audit you have to make judgments. Sir, audit mein, haan. See, financials, when you are preparing, there are judgments involved. How much provision for doubtful debt? How much should be the useful life of fixed asset? So management makes judgment while preparing financials. Management is making judgment while preparing financials. You, as an auditor, you also have to make judgment while you're doing audit, sir. Example. Okay, simple. Nature, timing, extent of audit procedures to be done. So which procedures to be done, when to be done, how much detail to be done. Nature is which, timing is when, extent is how much detail. So which procedures to be done, when to be done, how much detail to be done. Can I say it's your judgment? Okay, whether you should give a clean report or a modified report. Whether I should give a clean report or a modified report, that's again my judgment. See, same issue, some chartered accountant may give a clean report, some chartered accountant may give a modified report, some tells okay, this is okay, chalega itna. And some people say no, this is also not fine. So they might give a modified report. So which report to be given, that's again your judgment. Okay, then which are the risky areas? That's again you are deciding, you are judging, wo aapka judgment hai. Plus you will also judge whether the judgments made by the management are proper or not. Management made judgments in preparing financials. You are checking whether the judgments made by the management are proper or not. वो आपका judgment है. So many places in audit we are required to make judgment. They say that whenever you are making judgment, apply your knowledge, skills which you have gained through your formal education, through your articleship, and also see the facts and circumstances. To apply your knowledge, see the facts and circumstances, then make a judgment. That's a professional judgment. Okay, so check the definition. Professional judgment means application of relevant training, knowledge, and experience. You apply your training, knowledge, experience in making informed decisions that are appropriate in the circumstances. So you apply your relevant training, knowledge, experience, and you make informed decisions which are appropriate in the circumstances. I hope this is clear. Now, professional judgment is basically required for following things. Professional judgment is basically required for the following decisions. Okay, one, to determine the materiality level. Okay, whether this material or not. 1,000 rupees, is it material? 10,000 rupees, is it material? The materiality level which we decide. That's your judgment. Nature, timing, extent of audit procedures to be used. That's again your judgment. Acha, whether you got a sufficient appropriate audit evidence. See, we are required to obtain a reasonable assurance. To obtain a reasonable assurance, we have to obtain sufficient appropriate audit evidence. So whatever evidence we have got, is it sufficient, appropriate? That's again our judgment. So evaluating whether sufficient appropriate audit evidence have been obtained. Evaluating management's judgment, whether the judgment of management is proper or not. Estimates of management are proper. We make a judgment on that. Drawing conclusions, whether I should give a clean report, modified report, that is also covered. And professional judgment, you have to exercise it throughout your audit. Throughout your audit, you have to make judgment. Professional judgments you have to exercise, and you also need to document your professional judgment. So whatever professional judgments you are making, keep on documenting it. Any doubts? Anybody till now? I know you've done this at your inter level, but better is to revise it, and better is basically to go in depth. You might not be knowing each and every nitty-gritty. Yahan pe we are covering everything in detail. And the base is stronger. Later on, it will be helping us. 50 to 55 marks is your engagement standard. So very, very important. And sir, how do I ensure I'm not feeling bored? I understand it's a theory class. Only way you need to keep yourself is you keep yourself engaged. You keep on speaking the things, whatever question I ask, you keep on replying over there. Plus you write down in the chat box, keep on drinking water, small things, please pay attention. Okay, so two overall objectives. To fulfill the objective, there were requirement. Requirement number one was ethical principles we need to follow. Second number, professional skepticism we need to have, attitude. Third one is we have to basically have a professional judgment being exercised throughout the audit. Fourth one, the last one, sufficient appropriate audit evidence and audit risk. Sufficient appropriate audit evidence and audit risk. See, your first objective is to obtain a reasonable assurance. To obtain a reasonable assurance, we need to obtain a reasonable. How can I be reasonably sure? When I have obtained a sufficient appropriate audit evidence. So to obtain a reasonable assurance, the auditor should obtain sufficient appropriate audit evidence. And if I have obtained sufficient appropriate audit evidence, and based on that, if I express my opinion, can I say chances of my opinion going wrong will be less? I have checked in detail. I have obtained sufficient appropriate audit evidence, and then I'm giving an opinion. So audit evidence is necessary to support the opinion and report. That's fine. To obtain reasonable assurance, the auditor should obtain sufficient appropriate audit evidence. Okay, किसको बोलते हैं sufficient, किसको बोलते हैं appropriate? Sufficient relates to quantum, quantity. Appropriate relates to quality. But यहाँ पे quality की जगह word is relevance and reliability. Sufficient relates to quantum, appropriate relates to relevance and reliability. Okay, now suppose I'm checking sales. If I'm checking sales and I need one, the sales invoice. Yeah, I need sales invoice. Second, I need the GST returns which you have filed. I want to compare the sales which is the invoice may, what you have recorded, what is there under GST returns which you have filed. Plus I want the inward register और आउटवर्ड रजिस्टर, तो यहाँ पे सेल्स किया, आई वांट अ एंट्री इन आउटवर्ड रजिस्टर, दैट ऑल्सो आई नीड इट. एंड यू आर सेलिंग गुड्स बेस्ड ऑन वेट, यू आर सेलिंग गुड्स बेस्ड ऑन वेट, तो आई नीड द वेइंग स्लिप. आपने वे किया होगा, वो वेइंग स्लिप होगा पूरे ट्रक का वेट, तो weighing slip will be there. So I need this all things. So I need first of all the invoice. I need number 2 is basically your goods outward register. Third, I need the GST data. Fourth, I need basically the weighing slip. And fifth, I need to check the payment received in bank statement. Okay, there's 5 documents I need. If I get all 5, sufficient ho gaya. The sufficient relates to quantum. I need 5 evidence. You give me all 5, quantity matched. But what if all 5 are fake? I wanted all 5, they gave you all 5. So sufficient, but all 5 are fake. Is it appropriate? No. Appropriate relates to relevance and reliability. The evidence which you are getting has to be the relevant one. And second, the evidence has to be reliable. Fake are not reliable, na? So you wanted 5 things, they give you all 5, it is sufficient, but all 5 are fake, it's not appropriate. You need to obtain sufficient and appropriate audit evidence. ठीक है. Now, why do we obtain sufficient appropriate audit evidence? To reduce audit risk to acceptably lower level, so that the opinion doesn't go wrong. And you can express your opinion, you can come to your conclusion. To reduce audit risk to acceptably lower level. Now, question comes here, what's an audit risk? The question comes over here, what's an audit risk? Audit risk is the risk that auditor may give an inappropriate opinion when the financial statements are materially misstated. Okay, now pay attention. Audit risk is the risk that auditor may express an inappropriate opinion. Audit में risk क्या है? आपका opinion may go wrong. See, what do you do in audit? I have to give an opinion. The risk is my opinion going wrong. That's the only risk. The audit risk is the risk that auditor may give an inappropriate opinion on financial information which is materially misstated. Now pay attention. No need to write, just pay attention. No need to write, just pay attention. Okay, financial statement contained fraud or errors. Auditor not able to find. Okay, financial statement contain fraud or error, auditor not able to find. So instead of modified report, auditor gave clean report because auditor was not able to find. Financial statement contained a material misstatement, frauds and errors. Auditor was not able to find. So instead of a modified report, auditor gave clean report. Is it audit risk? Is it covered under audit risk? Instead of modified report, auditor gave clean report. Is it covered under audit risk? Yes. So this is audit risk. Yeah. Okay. But now I just change the question. Financial statement did not contain material misstatements. Auditor found few misstatements. No need to write, just pay attention. The financials does not contain material misstatement, but our auditor found few misstatement. So instead of clean report, auditor gave modified report. आपको थोड़े थोड़े मिले, 1-2 आपको कुछ एरर्स मिले होंगे, and because of that you give modified report. Is it covered under audit risk? Answer is no. So why not covered under audit risk? This is first of all very rare. Now just tell me one thing. Financial statement does not contain a material misstatement, but you found. ऐसा तो हो नहीं सकता. Financial statement does not contain a material misstatement, but you found a material misstatement. That's very rare. This is very, very, very rare thing. So they are telling that this is not covered under audit risk. What is covered under audit risk? There were material misstatement you could not find out. And because of that, your opinion went wrong. So audit risk is a risk that the auditor expresses the inappropriate opinion when the financial information is materially misstated. Did you understood? Okay. So this is when the financial information is materially misstated. Now, audit risk is divided in three parts. Audit risk is divided in three parts. It has three components: inherent risk, control risk, detection risk. The audit risk has three components: inherent risk, control risk, detection risk. Coming to first one, inherent risk. Now, what's an inherent risk? What is an inherent risk? See, tell me one thing. There are two companies. One company is planning to come out with new funding. Other company is not planning to come out with new funding. Okay, तो एक company को funding चाहिए, दूसरे को funding नहीं चाहिए. If I ask you a simple question, the chances of fraud or error related to inflatement, chance of fraud and error relating to inflating the revenue, inflating the profits will be high where? One company needs funding, other doesn't need funding. The one which needs funding, can I say they might try to inflate your profits. They might try to inflate basically the revenue. तो वहां पे there is an inherent risk. तो यहाँ पे 2 हो गया, उसमें depending on facts, circumstances, that's inherent risk. And see, inherent risk is dependent on quality of item, circumstances, product, उसके ऊपर होता है वो. Okay. Now, if I ask you a simple question, there are two products. One is a very small, this much size. And another is, just 1 minute. Pratap says, sir, most of the students not able to access live. Just 1 minute, hold on. I'll do one thing. I'll just restart the link. I'm just restarting the link. The lecture is continued. You just please stay over here only. Let me just restart the link. Am I audible, visible now? Am I audible, visible properly now? Just let me know. Am I audible, visible now? Okay, thank you. Okay, I'm just continuing. Those students who missed a part of it, if you have any doubt, you can please ask it to me later. Currently, let me just continue. So what all you basically missed, 1 or 2 points, you can just write down the points which you have missed. I'll cover it at the end. I repeat, what all you have missed, just write it down. I'll cover it at the end. Currently, I'm just continuing over here. Okay, so we understood the meaning of the word audit risk. Audit risk is the risk that auditor may express an inappropriate opinion. The opinion of auditor is inappropriate when the financial statements are materially misstated. So there were misstatements you are not able to identify. Instead of modified report, you give clean. So instead of modified, you're giving a clean report. That's a audit risk. But instead of clean, you give modified. Instead of clean, you give modified. That's not possible, dear. See, there were no material misstatement, but I found it. ऐसा कैसे होगा? There were no material misstatement, but you found it. So instead of clean, if you give modified, that's not covered. So I'll just write it over here. I put a star. Instead of modified report, clean report given. This is covered under audit risk. Okay, instead of clean report, modified report given. This is not covered under audit risk because not possible, very rare. Not covered under audit risk. It's not possible, it's very rare. There were no frauds and errors or material misstatements were not there, but I am able to find out. यार है ही नहीं, कैसे find किया? So this is very rare, not covered under audit risk. Okay, now audit risk has three components. We're doing components of audit risk, three components: inherent risk, control risk, detection risk. Inherent risk, control risk, detection risk. Let me explain you with a simple example. And then I'll go to the language which is given. Imagine after completing your articleship today, you're returning home at around 8 p.m. थोड़ा late हो गया आपको. You're returning home at around 8 p.m. and there's a signal coming in between. There's a red light at a signal, but the traffic is not there. Somehow, imagine today the traffic is not there. There's a red light at the signal, but traffic is not there. Question: would you stand at the signal or would you jump the signal? I hope you understood the question. You're returning from your articleship, you're coming to your home. Night 8 o'clock or 9 o'clock is there, red light is there, but traffic is not there. Traffic is not there. Would you stay over there or would you jump the signal? Okay, some people are telling, sir, we'll basically stand at the signal. Some people are telling, sir, we are jumping at the signal. We'll not be standing, we'll jump the signal because traffic is not there, nikal jate hain. Traffic is not there, police is not there, camera not there. So police and camera are not there. Police is not there, camera not there, traffic not there. What will you do? Okay, so sir will tend to jump. So imagine what happens in India if there's a situation out of 100, say for example, out of 100, say 60 people jump. 60 people, they jump signal out of 100. So what is happening over here is, इसको बोलते हैं inherent risk, खून में है. Inherent risk is 60%. The 60% of the people are not standing over here, they are jumping the signal. But imagine the same situation. Say for example in US or UK or Australia or basically say New Zealand, the same situation is there. The number of people, वहाँ पे भी है, there are people jumping over there, वहाँ पे Indians are also there. but number of people jumping the signal over there, can I say will be less? So suppose similar situation in US, only 5% people are jumping signal. Similar situation in US, 5% people are jumping signal. So US में the inherent risk is 5%. India में the inherent risk became how many percent? 60. Now, ठीक है, this is no camera, no policeman, traffic नहीं है, how many will stand, how many will jump? 60% people are jumping, so 60% is inherent risk. Now, imagine police standing or camera there. Police is standing or camera there. Now tell me, now out of the 60, anyways 40 were not going to jump only. ये जो 60 है, out of the 60, how many people will still jump? Policeman is standing or camera is there, but out of the 60, how many people will still jump? Can I say policeman standing or camera there is a kind of internal control to prevent the frauds and errors? Out of the 60, how many will still jump? See, it depends. It depends on quality of control. It depends on what? Quality of control. You see a policeman standing, but policeman is standing in the corner talking on phone. Policeman is standing on corner talking on phone. Can I say people will still go and jump? So ये 60 में से हाँ, because someone saw policeman, someone stood. But out of 60, policeman is not. If policeman is not a proper policeman, he's basically a big fat policeman standing in corner with a phone in his hand, बातें कर रहा है. So now what is happening is out of 60, still 40 people will go. Out of 60, still 40 people will jump. This is what I'm predicting. Okay, if policeman standing, camera there, but I'll say not proper, yeah, proper. Two things. One is if they are not proper. If they are not proper, so let me have, say, "42 people jump signal out of 60. I cannot compare out of 100. Inherent was only 60 were going to jump. Out of that 60, out of the 60, even after putting policeman, they are not concerned. 42 are still jumping. So control risk is 70%. But imagine the policeman is a proper one. Policeman is proper, camera is proper. If policeman is proper, camera is proper. Now only 6 people jump out of 40. Those who are in hurry, they are jumping. Others, because of by seeing a policeman, they stood over there. So now in that case, the control risk is 10%. Okay. So inherent risk क्या है? There were no internal control. So what will be the probability of fraud or error? What will be the probability of fraud or error? Assuming there are no internal control. So no internal control, 60%. Now by putting internal control, still how many fraud and error are not prevented? Okay, policeman or camera which you're putting is not a proper one. So still out of 60, 42 will jump. So control risk is 70%. So can I say out of 60, ये जो 60 jump करने वाले थे, उसका 30%, 60 का 30%, 18 has been prevented, 42 are still not prevented. But if policeman or camera is very good, policeman standing in between, now people will not jump. So only 6 people are jumping out of 60. So now the control risk is only 10%. Did you understand? So what is a control risk? It is basically the frauds or error which will not be prevented. It will not be prevented by putting internal control. Control डाल दिया तो भी prevent या detect नहीं हो रहा है. This 42 and this 6. They are not prevented even if we put the controls. That is basically the control risk. Okay, now there's a word called risk of material misstatement. ROMM. Risk of material misstatement is nothing but inherent risk into control risk. Okay, I have a question for you. Whenever management gives you financial statements, whenever management is giving you financial statement, they prepared the financial statement, has it passed through the internal controls? Whenever management gives you financial statement, when they prepared financial statement, they have put in internal control. Yeah, तो internal control से pass होने के बाद the financials are given to you. Okay, so now Inherent risk into control risk is nothing but the risk of material misstatement. Very simple. Total there were 100 transactions. Total there were 100 transactions. If there would have been no control, the chances that there is a fraud or error will be 60. But because we put the control, 60 may say 54 got prevented. We had a good control. So 60 may say 54 got basically prevented or detected, and now only 6 error remain. So can I say now 6 error remained out of 100? Can I say now 6 error remained out of 100? पहले total 100 था. This is 60%. This is 10%. So 60 into 10%. This is coming 6%. 100 का 6%. 6 errors remain. 100 का 6%. 6 errors remain. So whenever you're getting financial statement, is already passed through the internal controls established by the management. So whenever you're getting financial statement, so when they give me financial, there was some inherent risk. So usme se something would have been prevented or detected by the internal control. Those who are not prevented, detected, that only will remain in financials. So what is the risk of material misstatement in financial statement? Inherent risk into control risk. Did you understood? If controls were not proper, the 42 people would have still jumped out of 60. So what would have happened is 60% into 70%. 60 into 70, it will come 42%. So 100 ka 42% will be 42. Are you getting it? Okay, the inherent risk is how many frauds or errors will be there, assuming there are no internal control. Control risk is even after putting internal control, this frauds and errors will not be prevented or detected by entities' internal control. And now coming to detection risk. Now can I say there are 6 errors, assuming controls were proper? Okay, this is risk of material misstatement. Bracket में लिख लेता हूँ, assuming controls are proper. So this was 10%. If controls were not proper, this was 70%. Now, so whenever you got the financial statement, can I say now you will check the financial statement? When you check as an auditor, can I say you will also be able to find some fraud and error? See, audit risk comes if you are also not able to find the fraud and error. If you are also not able to find the fraud and error, and your opinion may go wrong because of it. But if you are able to find the fraud and error, उसके कारण opinion will not be wrong. Okay, so now suppose total there are 6 errors now. 100 total transaction. Error ki probability was only in 60. Out of 60 also 54 got corrected or prevented by the internal control. 6 remains. The 6 errors are there in financial statement. Now out of 6 you are checking, you will be able to find. Now tell me one thing. If you do a very good audit, can I say you'll be able to find majority of them? Out of 6 you're able to find 5. Out of 6 if you're able to find 5. So only 1 you are not able to find. 1 out of 6 you're not able to find. The 1 out of 6 is 16%. So detection risk will depend on quality of audit. Even after audit is done, that error or fraud is still not prevented or detected. That's detection risk. So if suppose out of 6 you're able to find 5, 1 you are not able to find. The detection risk is 16.67%. But if you do OK audit, you're able to find 3 out of 6. 3 out of 6 you're able to find, 3 you're not able to find. 3 you're not able to find, half you're not able to find. Detection risk is 50%. Did you got it? Now coming detection risk. Okay. If you do a proper audit, can I say 1 error remains out of 6? Out of 6 you found 5. 1 still remained. So this is coming 16.67%. Not OK audit if you did. OK audit if you did. So you are able to find 3 out of 6. So 3 errors remain out of 6. 3 remain out of 6. You are not able to find 3. So can I say the detection risk is coming 50%? Okay, now what is your audit risk? What is your audit risk? The audit risk is equal to inherent risk into control risk into detection risk. Or you can call it as risk of material misstatement into detection risk. Or you can call it as what? Risk of material misstatement into detection risk. Now in our case, inherent risk was 60%, control risk was 10%, and assuming we did a proper audit. Assuming we did a proper audit, this 16.67 percentage, do the calculation, total 60 errors would have been possible. Uska 90% is prevented by control, 10% remains 6. 6 में से भी 5 we have got it, 16.67%, 1 we are not able to do, so this is coming as 1 percentage. So out of 100, only one transaction, even after audit, would not be caught. Out of 100, only one fraud or error, even after one fraud or error, would not be caught. Uske karan the opinion may go wrong. Any doubts? Anybody? The inherent risk depends on the quality of item, basically the people kaise hain uske upar. Control risk depends on quality of control. If you have a good policeman, good cameraman, so it will prevent more, bach jayenge. What are not prevented will be less. And detection risk depends on the quality of audit which you are doing. Any doubts? If you have, please ask it. Now come to the theory. What is given? Now come to the theory. What is given? Inherent risk. It is a susceptibility of an account balance or a class of transaction to a misstatement that could be material, individually or with others. It is susceptibility of account balance or class of transaction to a misstatement that could be material, assuming there were no related internal control. Assuming there were no related internal control. If there are no control, out of 100, 60 mein there can be a fraud or error. It depends on quality of item, it depends on quality of people, it depends on quality of environment, that all thing. The inherent risk depends on type of item or people or environment. Okay, now control risk. Now control risk. It is a risk that material misstatement that could occur. Material misstatement that could occur in a class of transaction or account balance or disclosure could be material. So misstatement that could occur in a class of transaction or a account balance or disclosure could be material, will not be prevented, detected and corrected on a timely basis by internal controls of the entity. It will not be prevented, detected, corrected on a timely basis by internal controls of an entity. So this depends on quality of internal controls. It depends on quality of internal controls. And this essay does not refer inherent risk and control risk separately. We don't refer them separately, but we call them combinedly. Inherent into control risk is risk of material misstatement. Inherent into control risk is risk of material misstatement. Now coming to detection risk. Now coming to detection risk. It is the risk that the procedure performed by auditor to reduce the audit risk to acceptably lower level will not detect a misstatement that exists and could be material. The auditor is not able to detect. Achha, out of 6, if he is not able to detect 1, so detection risk is 16.67. Out of 6, he is not able to detect 3. So detection risk is 50%. This depends on quality of audit. This depends on quality of audit. Okay, I'll just highlight the keywords over here. For inherent risk, it is basically assuming there are no related controls. Achha, it will not be corrected, prevented, and detected on timely basis by the entity's internal control. Achha, detection risk is procedure performed by auditor will not detect the misstatement that exists. The auditor is not able to find it out. That's basically the detection risk. Clear? Okay. Now, audit risk is risk of material misstatement into detection risk. The audit risk of material misstatement has two components: inherent risk, control risk. So, audit risk is nothing but inherent risk into control risk into detection risk. Now, interrelationship between the components of audit risk. Now, tell me one thing. If inherent and control risk is high, people are not good, controls are not good. Inherent and control risk is high, people are not good, controls are not good. Detection risk कैसा होगा? If inherent risk and control risk is high, how will be the detection risk? Anybody wants to note down this, you please write it down together. This is actually not required as such, but for your understanding, you may write it down if you want. Tell me, if inherent risk, detection risk, inherent risk, control risk is high, how will be the detection risk? Okay, so majority of you are telling low. Answer is correct. Now see, if inherent risk, control risk is high, people are not good, controls are not good, the chances of frauds and errors are high. If chances of frauds and errors are high, we check in more detail. If I am checking in more detail, can I say I will be able to detect more frauds and errors? So what I'll miss out is less. If inherent risk, control risk is high, chances of fraud and error are high, chances of fraud and error are high, we check in more detail. Mohammed, we'll be checking in more detail. If I check in more detail, the detection risk goes down. Detection risk depends on quality of audit. If you are going to check in detail, detection risk goes down. If you're going to check less, detection risk will go up. So there's an inverse relationship. There's an inverse relationship between combined level of inherent risk and control risk with the detection risk. Alekhya, it's not like we will detect more errors. It's basically, there are basically inherent risk, control risk. People are not good, controls are not good. So chances of fraud and error are more. If chances of fraud and error are more, I will be checking in detail. If I'll be checking in detail, out of errors which are there, I'll be able to find more errors. Out of errors which are there, I'll be able to find more errors. So what I'll miss out will be the less thing. Okay? So check out over here. There is an inverse relationship between a combined level of inherent risk and control risk with the detection risk. I hope this is clear to everyone. Now, what is not included in audit risk? What is not included in audit risk? One we already covered. Instead of clean, we give modified. Instead of clean, we give modified. That is not covered. So the risk that auditor might express an opinion that financial statements are materially misstatement when they are not. When they are not. ऐसा very rare होता है. This risk is ordinarily insignificant. This risk is ordinarily insignificant. And number two, if you give a wrong opinion, आपने wrong opinion दिया, okay, so instead of basically a modified report, you give a clean report. Later on, someone files a case against you. So instead of a modified report, you give a clean report. Later on, someone is filing a case against you, and now you have litigations, you have penalties, all that thing. That's not covered. The auditor's business risk, such as loss from litigation, adverse publicity, that all is not covered in the word audit risk. ठीक है? ठीक है, inappropriate opinion, उसके कारण what will happen, because of that what will happen, the litigations will come, your adverse publicity will be there, newspaper mates coming, all that thing, that all is not covered in the word audit risk. Audit risk is just you are expressing inappropriate opinion. What will happen because of that, it's not covered. Now under audit we give a reasonable assurance. Okay, if we do 100% checking, imagine I'm doing 100% checking, can I give absolute assurance? If I do 100% checking, can I give absolute assurance? मैंने सब चेक किया, 100% I check. I didn't go for sample. I went for 100% checking. Can I give absolute assurance? Still no. So why still no? 100% I checked. Dear, many places in financial statement there were judgments. Acha, you feel judgments are proper, but can I say actual may still be different? So you feel judgments are proper, आपने सारे judgments भी check किए, but still that judgment is a judgment. Judgment may go wrong. So you cannot give absolute assurance. The auditor cannot give absolute assurance because there are some inherent limitations of an audit. Okay, so which are the inherent limitations of an audit? Audit के limitation है. One, the nature of financial reporting. The preparation of financial statement involves judgment. The preparation of financial statement involves judgment. And see, financial statement itself is based on judgment. That may come true, may not come true. तो financial statement ही judgment के ऊपर है. तो my opinion can never be 100% correct. Number two, the nature of audit procedure. अच्छा, ये था पहला nature of financial reporting. The financial statements are itself based on judgment. Second, your audit procedure. The nature of audit procedure. Okay, there are practical and legal limitation on auditor's ability to obtain audit evidence. Okay, see what you checked is what is recorded. आपने जो check किया वो recorded था. Can I say there might be something unrecorded also? Company wanted to show less profits, they wanted to pay less tax, so some cash sales are not recorded, some expenses are not recorded. What you checked is what is recorded. Can I say something not recorded है तो पता ही नहीं है. So there are legal and practical limitation on auditor's ability to obtain audit evidence. One, management or others may not provide the complete information to you. Management may not give you complete information. Okay, there may be frauds. There may be frauds which are carefully designed. There may be frauds which are carefully designed. It was a fake sale. It appears to be genuine. You see all evidence. They all appear to be genuine, but it was a fake one. Third, audit is not an investigation. You don't have basically the powers to go in that much detail. It's not an official investigation or basically alleged wrongdoing. Now, tell me one thing. Tell me one thing. Say for example, you want to understand the provision for doubtful debt. If I want to understand the provision for doubtful debt, can I say I need to understand the situation of the debtor, whether debtor is proper, not proper. So I need to understand the financial condition of debtor. Now imagine each and every debtor, I want to understand the financial condition. I need to understand how debtors' business are doing, what they are doing, all that things. So I have to go in much in depth. I don't do an investigation. I'm not going in that much depth. Plus the cost which will be incurred. The cost which is going to be incurred for understanding the debtor's financial position will be much more. So what is happening is, whether the provision for doubtful debt is proper or not, I spend a lot of amount on understanding how debtor's financial situation was. You can't spend that much na. Imagine the figure 1000 rupee. 1000 rupee को check करने के लिए you spend 1000 rupee. To check that 1000 rupee provision is proper or not, I spend 1000 rupee another. वो हो ही नहीं सकता. That's not correct na. So there has to be a timeliness of reporting and balance between benefit and cost. You want a perfect figures? ठीक है, तो perfect figures requires more checking, in-depth things. That will require a cost. Nothing comes for free na. I have to hire some people who will basically tell me whether the debtor is really in good position, not good position. So that will require a cost, but I cannot incur that much cost sometimes. The cost benefit analysis also to be checked. And last one, other matters. Other matters affecting the limitations of audit. Now, out of this four, the second one itself is important, B. Not B, this one, second, the nature of audit procedure. And the fourth one also separately is important. Which are the inherent limitations of an audit? One, the nature of financial reporting. Number two, the nature of audit procedure. Number three, the timeliness and the balance between benefit and cost. See, if you go in that much detail, everything, you will not be able to finish the audit on timely basis. The audit will not be useful unless you give the data on timely basis. Okay, if at all someone gives you audit report of current year after 5 years. So this year ka audit report you are getting after 5 years, yaar 5 years khatam ho gaye, now what to do? So that is not acceptable, na? So you cannot go everywhere in detail doing investigation kind of thing, that's not there. And there are some other matters. Which are that other matters? Now see, in certain cases, your ability to detect the material misstatement goes down. In certain cases, your ability to detect a material misstatement goes down. Sir, why? Because of that items. In certain cases, my ability to detect the material misstatement goes down. Which are that matters? Which are that matters? One, fraud. Particularly the fraud involving senior management. If senior management is involved in fraud, they will be doing fraud in a very good way. I'll not be able to find it. Then, related party relationships and transaction. Whether it's a related party or not, sometimes I may not be able to identify. Okay, whether it's a non-compliance of law or regulation, because there are many laws which are operational. Acha, Air, Water, Pollution Act. Do we know? Have we learned Air Act, Water Act, Pollution Act? So many acts are there. Yeah? The non-compliance of laws and regulation really has happened or not, I may not be able to understand every time. And whether future events and conditions are there which will affect going concern. Future. तो कोई फ्यूचर में ऐसा कोई इवेंट या कंडीशन होने वाला है. सी मैनेजमेंट माइट बी नोइंग दिस कॉन्ट्रैक्ट विल नॉट बी रिन्यूड. मैनेजमेंट बी नोइंग फ्यूचर में विल हैव दिस प्रॉब्लम. They might not tell me the future events or condition that may affect a going concern. So this all basically other matters are there wherein my ability to identify the misstatement will be very less. Which are that other matters? Fraud, particularly involving senior management, existence and completeness of related party relationship and information transactions, occurrence of non-compliance of laws and regulation, and future events or condition that may affect the going concern. Did you understood? Now, there's a question particularly on this. I told you, under final level, questions are not simple. They're not going to ask you write a short note on inherent limitation of audit. वो inter है. Inter में that is fine. Final में नहीं. Final में they will ask you what? There are practical and legal limitation on auditor's ability to obtain evidences. Which are they? Okay, so they are asking this point too. There are practical and legal limitations on auditor's ability to obtain evidence. Give examples of them. So I have to write A, B, and C. Okay, they might tell you there are certain matters where auditor's ability to identify material misstatement will be insignificant. Name such matters. So I have to write down fourth point. Are you getting it? Okay, check question number 1. This was asked in May 21 exam. Check question number 1. This was asked in May 21 exam. Messrs. SG and Company Chartered Accountants were appointed as auditor. For the year 2020-21, the company implemented internal controls. The auditor carried out test of control, find out no major observation. After completion of audit report was submitted. So you did audit, you did not find anything. After audit completed, you submitted the audit report, and fraud relating to inventory came subsequent. Acha, fraud pertaining to area of inventory came to light subsequently after the auditor has submitted the report. And the auditors were asked why they failed to identify the fraud. तो auditor को पूछा why they failed to identify the fraud. The auditor said there are inherent limitations of an audit. We cannot give absolute assurance. We give a reasonable assurance. The auditor said due to inherent limitation of audit, it is not possible to get persuasive evidence on certain matters like fraud. The auditor said it is not possible to get a persuasive evidence on certain matters like fraud. Do you think auditor has made a correct statement? Also discuss what they are asking. Also discuss the subject matter or assertion where it is difficult to detect a material misstatement. Acha, subject matter or assertion where it is difficult to detect a material misstatement. Can I say it is this point? Subject matters or assertion where it is difficult to detect a material misstatement. Answer is only for this point number 4. In your point 4, there are 4 points. In your point 4, there are 4 points. If question is asked for 4 marks, this 4 points has to be there. If you write general, marks will not be there. Which are the subject matters or assertion where it is difficult to identify the material misstatement? 1. Fraud, particularly the fraud where senior management is involved, or collusion, people coming together and doing fraud, that's collusion. 2. Existence, completeness of related party relationship and transaction. 3rd, whether non-compliance of laws and regulations have happened or not. And 4th, future events and conditions which can affect the going concern. Any doubts? Question number 1. Explain point number 4 of inherent limitation of an audit. In your auditing subject, please make sure the last lines you interpret very properly. The last 2-3 lines ke questions you need to interpret very properly. First, they'll give story. What is important is the last 2-3 lines. Okay, we just finished the second part of this standard. The second part of the standard is conduct of audit in accordance with essay. Okay, the first part is overall objective of independent auditor. Second part is what? Conduct of audit in accordance with essay. Whenever you're doing audit, you need to comply with all the relevant essays. So complying with essays relevant to audit, whichever essays are relevant. Okay, for example, SA 510. SA 510 is on opening balance. That is applicable only when the audit is for the first time or last time someone else was auditor. So company ke books are audited first time or last time someone else was auditor. Now you are there, you have to check the opening balance. But can I say it's only when you get the audit first time? But if it's a recurring audit, last time also you were auditor, this time also you were auditor, so can I say then SA 510 is not applicable? So you need to comply with all the essays relevant to the audit. ठीक है. You should have understanding of the entire text of essay, including the explanatory and other application material. I told you every standard. Yesterday I said every standard mein there's a bare text and there's an application and explanatory material. You should have understanding of both. ठीक है. Now there are objectives given under each and every essay. I told you every essay has the objective, and to fulfill the objective there are requirements. So to achieve overall objective, you need to use the objectives in the relevant essay. To achieve your overall objective, you need to use what? The objectives given in each and every essay, and you need to comply. To achieve the objective of each and every essay, you need to comply with the requirement of every essay. You should comply with each requirement of essay unless the essay is not relevant or the requirement is conditional, condition doesn't apply. The requirement says this you check for listed entity. Requirement is telling this thing you check. If it's a listed entity, this is not a listed entity, so don't check it. Okay, if essay is not relevant, entire essay not relevant, like essay 510, opening balance, it's a recurring audit, not applicable, so leave it. And some requirements are conditional. If condition doesn't apply, that also you leave it. Otherwise, you need to comply with each requirement of essay. ठीक. Achha, exceptional cases, you may depart from the requirement of essay. In that case, you should perform alternative audit procedure. Exceptional cases, very rare case, you may depart from the requirement of essay. You may feel that what is given in essay is not valid over here, so you do some alternative procedure. ठीक है. So you need to comply with essays relevant to the audit. To achieve the overall objective, you need to use the objectives which are given under each and every essay. Acha, follow the requirements given under each and every essay. You follow what? The requirements which are given under each and every essay. And when I don't follow the requirement, if essay is not relevant or the requirement is conditional, condition doesn't apply, then extremely rare case you're deviating from essay, you should do some alternative procedure. And lastly, if you fail to achieve objective, if you fail to achieve individual objective, evaluate whether overall objective you are able to achieve. If individual objective cannot be achieved, evaluate whether this prevents from achieving the overall objective. If individual objective you are not able to achieve, whether it is affecting your overall objective ka achievement. If yes, and try to see whether you need to modify the report or you can withdraw from engagement. So if you feel that the overall objective you are not able to achieve, if you are not able to achieve the overall objective, either you give a modified report or you can withdraw from engagement. Clear with this? So this is the second part, not much important as such, but it's given, we have done it. Second part, it's not much important, it's given, we have done it. Okay, come to question number 2 and 3. We'll finish off essay 200. Okay, question number 2, you are running several stores dealing in ready-made garment for all season, shoes, gift item, watches. Shoes, gift item, watches. Okay. There are security tags on each and every item. Okay, if you try to take out the item without billing, beep, 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 beep will come up. And they also do a physical verification of inventory on monthly basis. Discuss the inherent control and detection risk as perceived by auditor. So inherent is kya hai? Okay, these are ready-made garment, shoes, gift item. It is possible employees may also steal it. So inherent risk. It may be misappropriated by employees. And because of that, the inventory records may be inaccurate. Employees may also manipulate. The one who is doing recording, one who is basically physical custody, the one who is keeping a watch on go down, they only steal it. And he is basically there with the guy who does the physical checking on monthly basis. Together they are doing fraud. Inherent risk. Okay, control risk. Control risk. Achha, you have employed the controls. Security tags are being kept. Monthly physical verification is there, but due to collusion of employee, this control may not work. So still, collusion of employee may be there and this control may not work. Collusion amongst employee may be there and the controls may not work. Detection risk. Auditor checks the efficiency, effectiveness of internal control. He will make observation, inspection, inquiry. He will try to see whether the controls are proper or not. However, despite all procedures, auditor would employ a sampling technique to understand few transactions from beginning till end. So you will try to check the controls, you will try to check few transactions from origin till its end, but still it is possible even after doing all these things, you may not be able to detect some of the misstatements. Okay, this is answer given. Okay, not much relevant from exam angle. If it's important, it's written as important. Here it's not written, though okay. Read it later on. Any doubts are there, ask me tomorrow. Now, under auditing subject, understanding the question is very important. What is asked? Pata chalna chahiye what has been asked to me. The applicable financial reporting framework often encompasses a financial reporting standard established by an authorized or recognized standard setting organization. The applicable financial reporting framework generally will be the accounting standard or Ind AS. In some cases, the financial reporting framework may encompass both the financial reporting standard established by the standard setting body and some regulatory requirement. क्वेश्चन क्या है? Other sources may provide direction. Other sources may provide direction on application of applicable financial reporting framework. So which is the applicable financial reporting framework? How to apply them? There are some sources which will give you direction on this. Mention those sources. Okay, the statute. So how do I understand which will be the applicable financial reporting framework? One, based on statute. Second, there are some published accounting interpretation. So how to use them? Uske liye interpretations are there. I can use that. Then, published view of varying authority. Published view of varying authority. ICAI has come up with some publication. Others have come up with some publication. Wo general industry practice. And last, accounting literature. So how do I understand how to apply that Ind AS? अच्छा, ये Ind AS कैसे apply करना है? All that things. Or which Ind AS will be applicable over here? So one, you try to see statute, law, what does it say? Second, the published accounting interpretations issued by our ASB, Accounting Standard Board, or internationally we have basically IFRS committee, etc. They all have issued something. So that published view of varying authority on emerging accounting issues. General industry practice, what happens under industry wale kya kar rahe hain, that you see, and based on that you apply. And accounting literature, conflict is there, the sequence given has to be the same. So use first what statute says and last may use the accounting literature. Accounting literature are nothing but the reports or basically the publications or articles written by some authors. So when conflict exists, the source with highest authority prevails. Okay. So applicable financial reporting framework we have. Now there are some sources which provides direction on application of applicable financial reporting framework. How to apply that Ind AS, how to apply that AS under certain circumstances. So ये circumstances में whether this is to be applied, not applied, how to apply, confusion comes. So what do we do? If I have some statute, rules, regulation, follow that. If I have some interpretations issued, we had general clarifications. Same way under AS, same way under Ind AS also. Under your auditing standards, we had general interpretation. Same way under your accounting standard also, interpretations are issued. Or we have appendix. So under your Ind AS के साथ appendix होती है. IFRS committee is there internationally. They come out with some interpretations. So try to see that. Published views of varying authority available on emerging issues. General industry practice, and last is accounting literature. Application of applicable financial reporting framework. So some issues are there. We don't know how to apply Ind AS, what to do. You take help from these sources. Did you understood? Did you understood? Okay, we are done for the day. We are keeping it up till here. We are just finished one standard today. We have just done one standard today. That's SA 200. 210 will be starting tomorrow. And just one sentence for you. Just one sentence for you. It says, this basically sentence, I read it on one of the metro wall. So metro rail was there. Uske basically one pillar was there. In that pillar, the sentence was written. It's a very good one. It says, I may cry, but I should not allow others to make me cry. See, अगर मुझे रोना है, I'll basically cry, not an issue. But you should not allow others to make you cry. Make yourself such strong that even anyone else is not able to make you cry, even your ICI. So prepare yourself in such a manner, whatever paper comes, easy, difficult, doesn't matter to me. ICAI cannot make me cry. I need to make myself such stronger. Chalo, see you all tomorrow. Tata, bye-bye, take care. Any doubts are there, let me know, or else we'll meet tomorrow. Bye Naveen, bye Lekha, bye Aisha, bye Mohammed, bye-bye Srinidhi, bye Indu. Bye-bye everyone. Please make sure whatever you are doing in class, go home 30 minutes. 30 minutes, just revise it. Whatever things you have marked, at least you read that much once. Okay, Mohammed, there's a question, sir. Is material for FR available? Answer is yes, but dear, we are not providing the soft copy of material. If you want a physical copy, you can get it from Yashash Academy, Bangalore. So, if you want a physical material, Yashash Academy, Bangalore, so you'll be getting it. Bye-bye, Spurti. Bye, Pratap. Bye. Yeah. Mohammed, I'm telling for FR only, the physical material you can get it on payment basis. Soft copy we are not providing for entire material. Okay, Srinidhi has a question, sir. MCQ book of audit and FR, it will be given to you later on. MCQ book of auditing will be coming up at the end. Currently, I've given you only part 1. There's part 2, part 3. 2 books of auditing are pending. And FR, I'll give you MCQs. Once ICAI comes up with certain kind of MCQs, we're able to understand what they want. Okay, Srinidhi? Done. Chalo. Bye-bye all. See you all tomorrow.